Good morning, everybody. We're going to go ahead and get started. We got a couple alerts going on right now, so we will make sure we hit those if we can. Got a little bit of day trading hangover. It feels like the voice is not all there yet. Kind of groggy this morning, but ready to get started. Let me go ahead and do our disclaimers for the morning so we can kick it off real quickly. Trading foreign exchange on margin carries high level of risk. It may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange market, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risk associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Today's agenda is from about 8 o'clock to 9:30. We're going to cover as much as we can in a very, very short amount of time. We'll start off about 8 to 8:30, 8:45 with just the basics. Not going to get into anything really majorly deep as far as how you can really get into those precision entries. If you're not already following us on the Telegram channel that Auvoria Prime set up for us, make sure you do that. I put a bit.ly a little bit easier to remember than all those other digits. And remember, this room is just kind of for collaboration and education purposes only. We are not licensed. I'm not licensed any longer. I know Matt and Al are not licensed. So we're not going to give any sort of financial advice or recommendations. If we do take a trade, which I would assume we will, because there's several different alerts. If we do take a trade, whether it be on live or demo, that is not any sort of recommendation that you should do the same. Make sure you're following your own trading plan. Our past performance is not indicative of what could happen in the future. We could still have some losses, and we would expect some losses. And don't, like we mentioned before, do not trade with money you cannot afford to lose. My philosophy is if it would make my wife panic, I won't trade it. That's a pretty good guide for me. Before trading live, always operate within some sort of written trade plan. Have your entries and what your rules for entries are, what your rules for exits are, and targets and good risk management inside of that trade. So let me go ahead and jump out of this and go right into the news for the day, because we want to be aware of that too. We got to go over here, and I've already marked it. Just quickly, we want to make sure we are understanding what's coming up. This morning at 10:30 Central, we have the pound. We will be done by then, at least our session with you guys will be done by then. But be aware of those things if you decide to keep continuing to trade after the session. Usually once we get our 2% or 3% daily goal, we kind of shut it down and go to demo and practice more than else. So just be aware of that. And so let's move on to making sure Al is here. Al, are you here? So we got gold and US yen. Al, your mic is muted.
There we go. How about now? Can everybody hear me?
I'm going to stop sharing now. You want to go ahead and share?
Okay, yeah, why don't you stop sharing and I'll start pulling up. I'll see if I can find a screen to share here. Bear with me today. I'm working remotely on my laptop today, so I'm a little bit compromised in that regard, but we'll see if we can work with this. Can everybody see my screen? It should be looking at the Australian US dollar.
Yes, your screen is showing.
Okay, good, thanks. All right, well, I'm going to go back to where we got the alert and how we drew the chart. Right now, it's still inside the wedge, so we're still good for now. I'm going to go to my 15-minute chart on my Australian US dollar. And we had the wedge alert at 7:45 this morning, which is just a few minutes ago. And it was an ascending wedge, so I'm looking at trying to expand the bottom of the wedge. Let me try to unsync this so I can make some things a little bit clearer for you. I did unsync this one. Let's sync that. And I'm going to unsync that. So we started with the 15-minute chart. We scrunch up a little bit. It was ascending. I started off with actually looking down here, and I actually liked this because it was a hit. I wanted to tuck it in just a little bit closer. So this breached the wick a little bit, so I'm going to take my A to this one right here. I am going to note the level of where this one is, because if this wedge breaks, it comes down, we're probably going to be looking at it bouncing, or at least attempting to get down to this level. My B is up here at the last previous high within the day. These are day break lines. And so I'm trying to keep the wedge inside the daily pivot high and pivot low. And so I start with my A here. I went to the B with my triangle tool, took my D and as close to where the alert was, and then I tucked it in. And so, and after that, I will go to the, I can go to my 1 minute chart. I'm going to expand that. I'm going to try to fine tune and tweak these as best I can. And I'm going to take this one right here. I'm going to take this one, tuck this in right over here. Here's where my A is, and you can see I have a little bit of a breach right here, which is acceptable. In fact, I kind of like seeing that a little bit. It's usually within less than a pip breach of it, so that gives some validity to this before it takes off again. Come back here to where my B was, and that's the previous pivot high. So that's the top of my wedge. Here's the bottom of my wedge. And then I go and I draw some trend lines over top of it. And I make a channel which is 2 pips to the downside, 2 pips to the upside. You can take this one off, delete that one. And so now we wait. And basically we're looking to try and wait for it to break either the top orange line or the bottom orange line. And once we get the break, then we start seeing if there's enough room to take the trade. Where did this window come from? Not sure where that came from. Any questions so far? So I said we start off on our 15-minute chart, try and find a significant pivot high and pivot low. Draw a trend line using the wedge tool or just a trend tool, and try and get to where you have the anchor, have a hit somewhere in the middle between my A and my C line. And if I can get that between the B and the D line, that's even better. Sometimes you can, sometimes you can't. There was a little bit of an attempt right here, pull back down. And so this is the top of the wedge. This was the last high before the wedge alert. And that's the Aussie US. What I'm going to do is I'm going to put another clone here. I'm just going to move it up here just a little bit. Yeah, so and I'm going to put an alert on this. And just so that if we're looking at something else in the meantime, we have a little alert to give us an idea where it may be. And I'm going to put another one.
You do have a one that's kind of getting ready to break out of a U.S. yen ascending, 7 o'clock Central. I mean, I've got a little set up on the other ones as well. So
do you have the U.S. yen drawn, Brian?
Yeah, already done. I'm amazingly fast. You want me to share my screen?
Yeah, why don't you share yours while I draw mine out?
Yeah, we can do that. Let me go ahead and move that over there. How fun is this? Okay, I'm going to stop sharing your screen, jump over to mine. All right, so you guys should be seeing my US yen. And what I did, again, similar to exactly, Al's taught me what I've done. Had a great week last week. Ascending, starting at 7, that's central time for me because I'm in Texas. So I went ahead and drew my big alert line, let myself know that that's the alert. Kept it very, very simple. Let me blow that up for you guys so you can see where those points are. Again, this isn't precision. This is getting close. Precision comes on our 5-minute chart. Notice this candle's way up here now. So we have to go down. That candle's actually above our wedge, so I'd technically be up here like that, but I already know what it looks like on the 1 minute, so we'll go down and clean it up. But if you're drawing it, it's going to look similar to this, most likely. And it's ascending. We have both lines ascending, so it's pretty aggressive because they're both nice and high. Looking back, there's really nothing else. I mean, I could go back all the way back here, but that's 2 sessions ago. So really, this is really the only true wedge that we really have being established. We can move some of these things up if we wanted to narrow it down a little bit. We'll look at it on a 1 minute chart. So let me drop this back. Now, Al will sometimes go to 5 and then go to the 1 minute. I go directly to the 1 minute. I don't like to waste a whole lot of time. I'm much more aggressive. It's that fear of missing out part of me, and I know my personality. So I get in there and I dig fast. So that's what I'm saying. I could come in here, and I see all this basing right here. I could bring that A into here and see what it looks like, knowing that that's been hit a lot. and then bring my B to the highest point. I really like that one because it was rejected there. I like to snug in my C as close as I can to my alert. Let me get this out of the way so you can see. Okay, so that's good. That was at 7 o'clock. There's my alert on the Aussie. We'll look at that here in a moment. And we're all set up, and we're getting ready to break out 2 of them at the same time. Again, we got then what we do in that case, and I would probably bet is what Al would say to do the same, is look for the one that has the greatest spread on the RCS strength tool. Let's go to the Aussie US and look at it real quickly. Right now we've got a 3-4 spread on the US yen, so that would be more my favorite because that's a pretty solid strength indicator to go long.
You know, in the Aussie US, we have a 1-point spread on the 15-minute.
So let's go back to our US yen. That would be most likely our best strength. And as soon as it comes up, I want to wait a little bit. Let me blow this up. I haven't had time to draw my line. And you think I'm a 4th grade teacher? I can't even talk in the morning. So what I'm doing is I'm waiting for it to come up in here. So I'm going to give it a 2-pip window for myself. I want to, because I'm a pretty aggressive trader. I need to see it come up in that area. Not all the way necessarily. That's pretty close to 2 pips. I got my chart set for a 1 pip, so that's about 1.5 pip. So we got plenty of time right now. We need to have a good solid close up in this area before we ever pull the trigger. And looking back in history of this thing, looks like we've got a lot of room to move. So it looks like we've got, for our 7 pip goal, I should say. So let's go back. Let this thing do its thing. There we go. Now, what I'm looking for is I'm going to go ahead, and I have one position that I like to take. I like to take an early position right now. I'm in for one position. Now I'm going to wait a little bit, and I'd like to add to my full position if it happens to pull back. What this does for me, it gives me a chance. For me, it gives me a chance to get in if this thing happens to take off. Like I said, I'm a pretty aggressive trader. It has not touched our wedge. Hasn't come back and touched the wedge. We got all these moving averages, and we'll talk about that here in a bit. Got a little fast today. And what I'm going to do is set up for a secondary order. You don't have to. You can take one full order right now and just let it ride. Notice our strength meters, 3-1, 5-1, and 5-1. That means we're in pretty good shape with the overall strength, and it's not going to change. Notice our whole moving averages, and we'll talk about these indicators here in a moment. All 3 are green to be long. This one may not come back all the way down. We'll have to see. We don't try to make predictions. We just let the market tell us. Now, if this thing goes blue, I'm going to add after it goes red, it closes red. If it goes blue, I'm adding to my position. That's what I'm going to do. And I will check your Q&A here in a moment. I see it pop up. Questions should go in. Don't put your questions in the chat box. If you put it in the Q&A section, it does pop up on our screen and I can see it, but I want to make sure I'm watching my chart and focusing here, because I'm just going to add a second position once this candle closes in 20 seconds, if it stays red. Now we have time on
the Aussie. It came down in, but it's retraced back into the wedge. So just you're good where you are right now, Brian.
The key thing for Hawkeye strategy is know what your daily bread is, take your daily bread, and when you get your daily bread, walk away and go into demo, number 1. Number 2, the fear of missing out is a big thing with day trading. Fear of missing out. You don't want to miss a trade, or you overtrade, and that becomes a problem too. So we've closed red. Now I'm going to wait for everything. Look at my strength meters. We're all good. And I am now going to add to my position. And it just so happened to be the same identical price that I got the first time. So I'm in full position now. And now I'm going to go back to the Q&A. While this does, let me go ahead and put this order on my demo here, because I don't trade. I don't use Awanda for our trade view for my trades, but this will give us a picture of what we're looking at in the big.
Andrew's asking where the stop loss should be.
I always put 7 pips away. I don't on my live account. I do not use a hard stop. I'm watching it, and I'm looking for the pip value to hit no more than 7. Here's what if you look at my performances, when I share my MyFX book, you'll notice my losses are between 3 and 4 pips. but I have a hard stop in mind. If it happens to want to go away from me, I always have that 7 pip. As a beginner, have that 7 pip mindset until you get used to watching it. I'm ready for something to tell me to get out, not for a hard stop to be there. But I've been doing this for about a month.
Gabriel, the position he's taking right now is the buy position, the
Correct.
long position.
Correct. And if it's too fast for you on the 1 minute, go back. Look at this 5 minute. I love managing on a 5 minute. Love managing. So when we watch this, you'll notice the breaks happened, but it hadn't come back to your wedge, so you haven't missed anything. Kim, tell everybody hi. They're all over the world.
Hello.
That's my wife. She's watching me do this. See you. Have a great day. There's a little price difference on my, I know it's just a small price difference on my entries. Very little. And so we're really, if we're looking at this on a 5 minute, this is how small this gets, guys. And this is what you got to understand, which is amazing. Let's just say I got in right here. And we're going for our 7 pip target. Let's go up here. I'm going to get a little bit more than 7, I guess. And a little bit, there we go, something like that. What's amazing is that's really not that much. It's really not that far, because when you go off and you look at this little box on the 15-minute chart, it's little bitty compared to the overall big scope of the move. The cool thing I like is that we have a lot of room over to the left, so that's a good thing. That's a good sign. Current strength meters are all strong. We're still green. And the cool thing about, we have some developers who put some tools in place for us. What it has allowed us to do is to actually come in here and monitor more closely on the 1 minute, because we already see what the whole moving average is doing. So now we're just letting it do its thing. Now, if we get to the 5 pip area and you're close to that 5 pip and we start seeing a change, take those 5 pips. Take those 5 pips. There'll be other trades you can get the other 2 pips later. But you're really looking for that daily. Now, don't get greedy with your daily goal. If you're new to Hawkeye strategy, don't get greedy with your daily goal. Our goal, we shoot for that 7% and using proper position size to maximize the movement. So I risk 2% of my whole entire trade. And so when I hit my 7, I'm getting my 2%. You do that consistently. And even over a short amount of time, you can really do some incredible profits in your own trading. Last week was a monster week for me, and all I did was consistently go for my daily bread. Is the position you took to buy? Oh, yes, we've got that answered live. Got that taken care of. Done. I'm looking at our stuff. This doesn't worry me. I wouldn't be surprised if this flips for a short time. This one down here doesn't worry. When it flips on a 1 minute chart, I don't worry about it. With your indicators, can we buy software license too? I'm not sure are you asking access to those indicators, Jay? If that's what we're working on that. We're working with Sal, we're working with the developers, we're working to see what the best, most compliant way to handle this is, because these are fantastic tools, but they're not part of Airis. If that's what you're asking. And we will keep everybody informed of that as we go. Yeah, that's what we're working on. We don't really know the picture of that yet. So we're waiting for some answers from those who have more official abilities than we do. Okay, we're getting close to our target. And again, we're having a pretty parabolic move. When this thing comes down, it may retrace quite a bit. So don't panic. We'll just keep watching our picture, see what our picture. Notice our strength is still very strong. I wonder what it is on the 15th. Yeah, it got stronger on the 15th. That's what's causing the parabolic move. Most likely, we're going to be in a position to really consider to go ahead and take our profit. And what we're doing with the indicators as we're waiting for this to take our profit is you're only allowed, we're trying to make it as very, very cost effective for our traders as possible, where they don't have to pay for TradingView the extra fees we do. Al and I have the paid version of this product, but you're only allowed 3 indicators per trading view if you have the free one. So what we did is we didn't have it. We have a developer who created all the moving averages as one indicator. We have the fib plotter, which is another that's another tool. But the MRSI is just two RSIs laying over the top, and that's one indicator now with the whole. Those three indicators are all together now. And then we have the RCS tool, which stands alone by itself. We have answered that. Answered that.
And right now, it looks like the Aussie US is breaking into the buys or the sell zone. How's yours doing there, Brian? I'm trying to watch two screens at once.
Right at the top towards top of. We're probably 2 pips away at max from hitting 7 pips.
Okay. Well, just I said I did go and take an entry into the Aussie US.
Let's go take a quick look at that. And normally I won't trade 2 pairs at the same time.
Yeah, actually right now, yeah, and I've only taken one, and actually this one's in demo because I'm on my laptop and I'm not able to switch back and forth easily on my screen, so I'm still learning.
There's my zone of entry. As you can see, I put my zone of entry, which we did not do with the US. This is when I usually had time. I put my zones of entry. Now I want to see what the population of this is. If US dollar is strong, then we could potentially, I don't like taking a lot of trades against, at the same time, because if they're US based and one goes wrong, they both go wrong. I'm going to take a small short half position on the Aussie US. So I'm going to be in that small one. But I really like the US yen hanging in there for me. And I would expect a pullback, and we just got the pullback. Now, if it happens to come all the way back down, I'm not going to be panicked because, look, on the 5-minute, we still haven't had a retouch. And that moving 13 moving average is going to be a key component of maybe I take a small loss. If our big picture strength and whole moving averages change, but I don't think we are. We're going to have a hook right here with the RSI. And I don't use RSI quite as much as Al does. I'm aware of it. But if you notice, our pullback happened right when they both went to the extreme. And they pull back. Now they're both starting to flatten out, which tells me we're just coming back to retest this general area here and possibly move on up to our target. Now you'll see I'm going to move these off here. I'm going to turn part of that off now that we're here, called the goal line, since my goal line's already been set. So the good thing about it is I'm short the Aussie US, which means I'm being long the US dollar in 2 positions. So I need the US to hold its strength. And I love seeing it at 6 because that means there's only one pair that's stronger out of our 8. Now this indicator is pretty cool. It can get really messy if you show all 8 pairs, but it tells me out of the 8 pairs that we watch, the US is number 4 and the yen is the weakest of those 2. So I have a pullback on the 1 minute. This could be your 5-minute chart entry. You're coming back into that zone. You can see my green line still sitting right there where we entered. This could be a place where, again, like I said, sometimes if you're a very patient person or more conservative person, this would be a great place to come back and enter again. If you're like me, a little more, I'm trigger happy. When it comes to swing trading, I'm very, very patient. When it comes to day trading, I know I'm very, very competitive. I know my personality. I'm not bored with this strategy yet. I know when I get bored with it, that's when it's going to be a good thing for me. Now we're coming to a place where we'd like to see it come down all the way down here and then pop back up again. But we don't know. We can't make that prediction yet. And again, so we kind of sit and wait.
This is not unusual to just come just shy of your target and then have it retrace back and retest where you got the area where you got into the trade first.
And most newbies would be pulling the trigger because they're going to be scared. I've learned let it go, accept a loss. It's not bad to accept a loss.
We're trying to keep these losses so small.
Yeah, just keep them small, and you know they're going to happen, and you just accept them. I'm winning 60% of the time, and I'm still okay with that. All right. Ruben says, I drew a different wedge on the Aussie US and went long, took the loss. So we have a philosophy in our room, those who are in attendance right now. If Ruben's in the room, as of right now, if he takes a long, you want to be immediately short. That's our joke. It's not completely true. We're giving him a hard time. We love Ruben. Ruben's a great asset.
Ruben's going to be a really good trader.
Yeah, he is. He's a lot of fun, very positive, and you can't be down and depressed and a victim when you're trading. There's too many people out in our world right now that are victims. This can change your life, though, if you learn how to do it and you can stay patient. Notice on the 1 minute, we had a little whole moving average change. That was just a nice little pullback, not a big deal. Look how tight we are on the, I told you I wouldn't be surprised if we flip down here. We are very close. That would be this movement here. And again, lagging indicator. This is not a lagging indicator. This is current strength. The only lagging thing we really have are the other tools. But this is why this is so important. So now we do want to watch this. If this thing flips and this thing flips, then we need to be careful of possibly taking the position that we have, whatever profits there, off the board if it happens to go that route, or take a small loss. That's how I would run it. Right now, I have a feeling as soon as this candle closes, we'll have it flip back to green here. That would be my assumption. We got a nice bouncing. Notice how it came down here and now it's bouncing up. We're going to retest this area to see what's up there. So let's go ahead and show you a little bit tiny sneak preview of an advanced tool that Al really likes, and I pay attention to it. I'm very well aware of it. It was designed off of my swing trading. Okay, so we have placed our fib lines. So if you notice, this is a green line, which means demand. These are price points. These are not Fibonacci retracement. These are actual fib numbers that historically prices either hesitated or moved from. So if you notice, our D was sitting right at demand. It came back, broke it, hasn't tested it yet. So that it came down as far as it could and moving. So our resistance line is this red one here. So we have a little bit of room, probably about a pip or two. So if this thing starts hesitating here, I'm probably going to take my trade if it doesn't automatically take my profit due to spread. So you want to be aware of spread. That's a cool little tool that we'll show you guys how to use as well. We use it to be mindful of where we would expect a hesitation or where we would expect a pause or a breakout from, and it's funny how it works out. If we go, and since we're still, that's a little concerning candle. So we have a battle going on here. For those who, I don't know how many have ever heard of Online Trading Academy. A lot of us spend a lot of money on education, but what we have is a nice flat area here and a rally basing and trying to rally out, and now this could be creating another base. A basing is very similar to what this is. This on a big time frame, the wedge itself is a basing. It's a battle inside of a battle until the buyers and sellers figure out who wants to win. That's all it is. So if you hear us say basing, it's just because Al and I have had some similar education, so our language is sometimes a little bit different. Now, back when I was doing stock brokerage stuff, we never looked at charts, so I'm very well at price points. So I'm very well aware of the nickel, dime, quarter, and half points. We didn't do Forex as such, but it's still the concept's still the same. You'll find with the US yen pairs, especially the yen pairs, they're going to gravitate to the zeros, the quarters, and the dimes. You can say quarters, 50s, which is the same thing. And so where are we having a struggle at the 25? Where did our fib line fall? Just 1 pip above the 25, which again would make sense since yens like to, that personality of that pair, the yen pairs like to gravitate to those quarters and dimes and zeros. So 0.25, they like those 0.25. And if you look here, you had a nice move out of that area, come back down with probably 75 cents is probably where it tried to get down to, and it did. It couldn't. Not recently, at least. So you get to know the pairs a little bit. Okay, we still got our 3 spreads. So this just means stay patient. This just tells me, guys, we're not going anywhere for a while. Stay patient. The battle's going to go on. As Al likes to use the analogy, it's just going back. The military troops have pressed forward, and they came back to grab the ones that were left behind, and now they're going to press forward again. That's what all these things are telling us. Could these change? Absolutely. Big one is this one. That was kind of strange to have a big wick here. So it's going to stay green. This one didn't change. On this pullback, it did not change to red on the whole. On this pullback, it stayed the red. So we've got the 15 on top, 5 and 1 all together. And it's just a battle right now. It's flattening out. And it looks like our Aussie yen is our Aussie US is also just flat.
Yeah, it's sort of stalled a little bit.
Is it still in our favor?
Let me just double check. I had to redo my charts here a little bit. Stand by.
Oh yeah, still in our favor.
Yeah, it's still in our favor. Yep, it's actually broken out, and it's now starting to actually make its way down to our target.
And that's
area.
a good sign for our US yen too. So I'm in this trade right here. I got in just as it was here, and now it's got a battle. You see where it was? It's got to close down lower than that, and then it needs to. We got some room. We got some room all the way down to the C area. So on this chart, we could come in here, and I like to do this. Take my short position. I know I got in right here. That's not short. That's not, yeah, it is. That's right. So I'm going to go in here and fix this and see if I can really make it. That blue line down there concerns me right here, because I know what that is. That's a 30-minute. Oh, yeah, it stops in a good spot. Yeah, we'll just let it do its thing. Let's see here. It's going to be a little tough. That's going to be our battle right here at that C area. We're going to expect a hesitation, maybe even a pullback all the way up. Pound US was another one we were looking at, and it's just wavering and waiting. And notice how I've drawn my lines on this 1 minute. I put my alert lines right next to the line, and then I put my zones of entry right above it, and I just let it alert me when it's ready to do its thing. Other than that, I'm going to stay right here. And notice that we're starting to battle back up. Let's blow this up. This is fun. I'm ready for it to not be quite so fun, because usually when you're bored with a strategy, that's when you're really good at it. And that's when you come in and you want to start teaching other people what you've learned and sharing it. I do that on Monday.
Jay, these fibs are really very helpful in finding out where the targets are.
Notice our 1 minute is battling on this hole. It's turning red, green, red, green. It doesn't know what it wants. If it can hold, that would be a good sign too. I mean, but we're not worried about it because our big picture is green, and we can expect to pull back a little bit here. We're high on the RSI, but our strength meter is still saying we're 3 spreads, so we're in good shape to be patient. And we're not going to get too advanced. We're just a little bit too far, but I want to show you guys something that you'll see Al do quite a bit. And for newbies, this gets kind of a little bit overwhelming, but I'm going to just show quickly and then take it off. Wedges happen all the time. And people say, do they happen in other asset classes? Yes. Do they happen on higher time frames? Yes. They happen all the time. The beautiful part about Airis is Airis is going to do the hard work for you, and it's going to find the pairs that match up the best. So we give a lot of weight to the Airis alert. But if you notice right now, you have an alert, a wedge right here. A wedge inside of a wedge. Now, it's not perfectly drawn, but it's pretty darn close to being, here's your touch, and here's your touch again. Could we come down? Sure, we could. But that's another wedge. So where do we expect to be stopped when it comes bouncing back up? Right about here, as it moves its way, its pattern through. Not a big deal.
A lot of times these wedges are actually the continuation patterns. So if we break the main wedge, which is where it is now, it broke out of the main wedge, and then sometimes they follow just small little wedges as they trend, as they proceed their trend upward or downward. And that's pretty much what you're seeing here.
Yeah, for those who are a little patient, You really want to take an entry on a 5-minute? Now you've got your 5-minute preparation to be made. And everything's still showing US strong. And so this is the area of entry that we marked off, 15 minutes ago, 20 minutes ago. So if you are a more patient person, this would be the one to consider if everything is still in order. And we got 2 spread there. We're getting a little bit slim on the spread. It looks like the Aussie's falling apart.
Yeah, it's coming back in and retesting. So struggling, the Aussie's having a hard time breaking out of that 3-pip range after the wedge.
And that would be the US. It would be based on the US at this point, because if the US is falling apart here and the Aussie's falling apart, it's not because of the Aussie. So that goes back to saying when you go into 2 trades at the same time with the same type of pair and it goes against you, you get the double whammy. So if you're okay with that, that's why if you're a newbie, I would not ever be in 2 trades simultaneously with the same pair or same combo of pairs like US-US. Now, when you win, you get really arrogant and cocky and think, okay, I've won 2 trades. That's because one pair happened to work. It's great when you win, but it's not so good when you lose. There's your retest. That probably is the same thing as on your 5-minute. You got a little mixed review on your whole moving averages.
Yeah, the Aussie has gotten stronger to the US.
I'm gonna close the Aussie pair with a small loss, a 2.5 pip loss. Again, that's why I have small losses. And I can always re-enter it, but it doesn't look like it wants to be the US really strong. It's flipping back and forth on the 15. And then it falls away. You just don't know. But I'm okay with it. I'd rather take the small loss and wait for the pair that I feel could have the potential.
All right, now it's coming back down into our entry zone again.
Oop, I just moved my stuff. Bring that down. There we go.
And basically, what the Aussie's doing right now is it's just consolidating at the apex of the bottom of the main wedge and the entry.
But the spread on the 15 is not. I like to have at least 2. So
yeah,
if I was trading it now, there's not enough strength there.
It keeps slipping back and forth.
Yeah, it may make the 7, but I don't like. That's one of the indicators of why I wouldn't take it now, is because it's not 2. Doesn't mean it won't work, because it very well could work out very well.
Yeah, right now, I'd say if you're still in the trade, there's no reason to get out at this point right now on the Aussie. It's giving you another chance to retest that entry zone that we developed.
I don't really particularly care for the way the US yen is flattening out, but that doesn't mean it's not going to just do what it's going to do. We just have to be patient with it. On the 15, it's just a nice little move out and pull back in. I would like to start seeing us grind out some of this wick that they had before entry, which we were already in it. That's what these 4 candles are. Is that these 4 candles represent the wick on the. We're just really kind of testing a pullback. Notice how it has flipped. I was telling you guys that this doesn't bother me. This is expected. As long as these 2 don't flip, you would expect this to happen. That's natural pullback. Let's blow this up just a bit. And we've got the pound US on alert too. So we haven't missed any alerts yet. So guys, if you're watching other things, we got the pound already marked up. And it's just what right in the middle. My bet is it's one of those pairs. Pound's probably sitting right here in the middle of these, or not doing much of anything. I don't know where it's sitting at currently with strength. Again, if you were patient, this would be a place where you could have added to your position if you took a small position to start. I'm right at break even right now, completely, totally at break even. That's a strong move. If we can have these candles continue to here, if it can close in the next 30 seconds looking like that, that'll be a nice strong move. Betting that had to be something on the 5.
Yeah, and Brian, the pound is the number 2 level on the 15-minute chart.
Yeah, so not my favorite. Again, that would explain why it's not moving a whole lot against the U.S. dollar. So far, the U.S. yen is our larger spread of the 3 that we're looking at. And again, even though we have that spread, does not mean we're going to make it happen. Doesn't mean it's going to make its target. We don't know what the next minutes have. But that's a good, strong closing candle on a 1-minute chart. Very strong. What we'd like to see is a follow-up candle to this to test that top high again and break above that previous high. Because what we have is a trend line right here. Just boom, boom, boom. If we can stay above that trend line, that becomes our support. So this is what Al would do. Al would come in here, and he would draw this little line. He would color it a different color because he can't see green on green. He would do that. And he would say, now my stop area, this their mental place is, if this closes below the wedge, I'm out. And notice, we got in right here. So at this current time, if he closes a candle below the wedge, he's talking 2 or 3 pips at most. This is why it's good to be patient. This is a good follow-up candle. If it can close looking like that, the buyers are more in control. And it did. The buyers are now more in control. Again, I would expect it to even come. But remember, this line's descending away. So but that's the line. It's a wedge. It's the wedge that we drew earlier. It's this line to this line. It's just a wedge.
And the Aussie pair is following suit with the same direction with the U.S.
And again, for those new traders, we know that would be because of U.S. strength, not because of Aussie weakness or yen. So when you see both, if you see the Aussie yen falling apart and the U.S. yen going up, it's because of the U.S. dollar strength. It's not has anything to do with the yen or the Aussie. Now we're looking nice and pretty again. We got green holes across the board. We're sitting on right about 4 pips-ish. And we got to go back and test this line, though. We've got to go back. Let's see what we got with fib numbers and see what we've looked at. Okay, there's our demand. Notice where price has just been hanging at, right where the fib line was. So, again, we drew our area of support would be right here. We would think that that would be the case. And our supply is a little higher up. We'll make sure this is on the right chart.
You can see right where it stalled the first time, right at that red fib line.
Right at the red fib.
Yeah, now it's going to go up. It's probably going to go up and retest that line and perhaps break through it and hopefully continue on up. You can see how, like where Brian showed, where there was a wedge. After it broke out of the main wedge, it formed that other wedge, which is to the top of where his white trend line is. That was the top of that wedge. It broke out, and now it's going to perhaps make the next move. There you go. And,
that's what Al would do.
You can tell Brian and I have been working together for a while. He's doing exactly what I think. All I have to do is think it. He does it for me.
If you want to be successful, imitate. And that's what I'm saying. When it comes to swinging, I've got that pretty well down. When it comes to this, I'm still learning. And I think I always will be. But
always a student. As Daisy Duncan says, always a student.
I thought I wanted to get out of school. I keep going back.
And so right now, the Aussie-US pair is still working in the right direction. It hasn't made the target yet, but it still has a few pips to go. But it came back to retest that entry zone a couple times, and now it's still outside, still trying to decide which way it wants to go, but it's still looking positive in our direction.
And you'll find that the Aussie will be mimicking this a little bit because it's based on that U.S. And remember, we're coming into our opening. Aussie's not open any longer. The Sydney office is done. They're done for the day. So this is all based on the U.S. And the yen is a safety currency. It is the place where countries put their dollars when there's a lot of uncertainty in the market. It's a safe haven currency because of the interest rate being 0. So there are traders that do go out and buy certain currencies. Like for a while there, for the Brazilian dollar was like 15% interest. They would borrow the yen they borrow the yen at no interest and then go buy the Brazilian dollar for 15% interest. I don't know how they did it, but I had a couple instructors show me that that's what they do, which is pretty amazing for a savings account to be able to do that. But you have to know exactly what you're doing to do that. But that's why they call it a safe haven, because it doesn't cost any money to borrow. The Swiss was kind of that way for a period of time. But when they unpegged, is what they call it, unpegged from the euro, that sent that into a different kind of phase. It doesn't operate quite the same as it has in the past. And we've got a pound US alert. I'm not all that thrilled with it because it's taken so long. We turn this off and we'll look at it though, just because we can. Okay, it's breaking out.
It's actually not breaking out the original wedge it had at 7:30 this morning.
Correct. What's the overall strength? It's got all three. I mean, I don't know.
It's all three. Strength to the British side, to the pound side, so it'll be strength to the upside. Okay. Not by a lot. We have a spread of 4-3 on the British. I have 4 British, 3 on. So it's only a spread of 1 on to the British side. On the 5-minute chart, it's a 4 spread, and on the 1-minute chart, it's a 6 spread. So it's generally strong, getting stronger, and producing some opportunities here, possibly. It looks like this is actually the breakout of the original wedge it had that I drew earlier. I can share my screen on this one if you want, Brian.
Yeah. Go ahead. I'm just sharing because I know you were in a predicament.
Yeah, thanks for kind of watching my back on that one. I'm still kind of struggling a little bit with this working off the laptop, but it seems to be doing okay. Let me start sharing.
Yep.
If I can find my share tool. Where'd it go? I lost it. Where's my? Oh, there we go. I found it. I just found it here. Okay, I think this is it right here. I think I should be able to see my British US. And here's the break. It was actually, this one is not this was inside the wedge. I was just looking at that for a reference here. I'm going to take this one. I'm going to take this one off. I'm on the 1-minute chart.
The question for me on this, do we have enough room to get to the 7 pips?
Yeah, that's going to be that's probably going to be the bigger question here. So right now it's at 26.05.
Not that it won't go 4 or 5, but do we have enough room to get to the 7?
7 here, right there. Okay, it broke out of the zone right here. So this is, get that one off.
And for this one would be U.S. weakness.
Exactly. Yeah. Now we had the break, the 2-pip break. Should I measure this out? This is 26.05 to, it should be 26.03. Let me see, there's our 2 pips. It's now it's just breaking out to the upside. We'll have to, right now there's no, we're going to have to wait for it to come back in towards at least this area where this little doji is right here. We'll have to wait for it to come back at least to the doji, but hopefully maybe more so into the zone area where it broke and give us another chance to get in. But right now, I would not want to be getting in. It's already broken. It's already, that's 26.0.
And remember, head fakes do happen.
Yes.
Head fakes do happen where it'll break out one side and get you in, and the next thing you know, it goes to the other.
So right now, that's basically, that was a 7-pip move from the break. That's basically your 7 pips. So yeah, so I mean, it could just, oftentimes they'll come back and give you another chance to get in. Take a look at all three of our time frames, and we're seeing that there is still strength on the British, not as much as I would like to see on the 15-minute, but it is solid on the 5 and the 1. We'll just wait and see if this thing comes back and gives us another opportunity.
If you're really, really patient, the 50 on the US yen, the 15-minute hasn't come back to touch the wedge. But I'm not quite that patient, so. And again, it's just to be a waiting game and be aware where price points are. I mean, we kind of have a new trend. Are you on the Aussie or the US yen or pound still? Pound?
You told I never did take the US yen because I didn't get in time.
Okay.
The Aussie, I am still in the Aussie, and I'm still barely profitable with that one. It's just still come here. I got in up in this area. This is my fill. This was a demo. I was able to get the demo in. But right now, here's my target down here on the US yen. You should be able to see my chart switch back and forth. Now you should be looking at my British US chart. Is that right?
Right.
And make sure you're looking at the right thing.
Yep.
Here was a little bit of pullback. Here's a nice little doji on this 1 minute. So that would be an area to, I still like to see it get back a little bit more into my zone here.
I would like for it to completely fall apart on dollar strength. That's what I would like to see, but I'm not so sure we're going to get that.
Yeah, I'm not sure you're going to get that either. Dollar is only a 3 out of the whole pack of 8. It's only the number 3. So
yen is 0. So
that should still be good. Yeah, unless the yen starts picking up steam. One thing about it, when it's 0 or when it's 7, it can't go any higher or lower. That means it's usually either going to just stay up there for a while because it is so weak or so strong. But once it starts coming out of that 0 level or that 7 level, it's starting to show some weakness. Right now, I'm not in this British US trade yet. I'm going to go get my chart set up on this to see if I can. I use Wanda just for my demo platform because that's the only one I can use to actually put these trades on and show you what it looks like. Kind of marks my entries. And you also see, like right now, the split on the British USD is 1.6, which is pretty normal, I think, for the British pair. I don't like trading anything that has more of a 2-pip spread. It just gets harder and harder to get your profits if you're only going for 7 pips. Right now, the British is still strong. It's losing a little bit of strength on the 5 minute. It's losing a little bit of strength, but if we can got a little bit of a bounce right off of this 2 minute trend line. It's bouncing real hard right now. If this candle closes blue, I think I'll probably take a position on this. And this is on the 1 minute candle right here. But I want to see it close blue first. 1 second. I'm going to take a buy on this one, market. My stop is down here at the inside the wedge. So right now, a nice push up, out, came back in, couldn't break into the wedge. That gave there's some good buyers right in this area. And so my stop is, if it goes back into the wedge, I'll be out before too long. There's my stop down here.
And guys, make sure you put any sort of questions in the Q&A area. Do it. This is a great time since it's kind of a lull. If there's a question, okay, how did you do this? How did you do that? Why did you do that? That's what we're here for. Last week you showed in Excel to easily calculate position size. Yeah, I will post that again. I'm going to put that in the Telegram channel. I got to go through compliance just to make sure everything's in order and make sure it's correct, and then I will put that in there for you. It's Mariska. Oh, shoot, I got to send it to you. I'll send that to you, and then you can tell me it's okay. Okay. I didn't read who it was from. Absolutely. I'll do that after we get done with the session today for you guys. So make sure you are in the Telegram channel if you aren't already in the Telegram channel.
And you can see right now this British U.S. The U.S. Like I said, the U.S. is getting a little bit weaker. The British is getting stronger. This is on the one, again, this is on the 1 minute chart. We go to our 5 minute chart. I'll expand that a little bit. And you can see it's one problem I'm looking at right now is just looking at there's a little bit of a bounce. It's got to break through the 62 exponential moving average. That's that purple line right there. It's got to break through that. It does have some strength to do it. And all my RSIs are coming out of that 40-60 zone. We are getting a little bit of a hook on the 5 minute, but the 8 period is still staying above the 60 level.
Guys, as well, you want to be aware of the whole big environment that we're in right now. If you've looked at, I've been in swing trades since February. Normally those would not last that long, but because of COVID, because of the protests, because of political unrest, we have so much uncertainty that in the longer to bigger term of looking at higher time frames, it's very, very flat. So sometimes even when it comes down and transcends down in the 15-minute, it's really flat. I'm looking at the 5 minute chart of the US yen, and it's in an uptrend, but boy, the range of each candle is very, very small. So this could be a trade that we hold on for a little bit today, and it may not get quite to our target by the time we normally. Our average trade lasts 20 minutes, 25 minutes, and you can see we're already past that. And these candles aren't but 1 or 2 pips in size. On the what's your pip size on your pound US? I'm watching my live.
1.9. That's a pretty good. You're talking about the spread?
Not spread, but your average candle size.
Average candle size. Let me just measure one out here.
Maybe 2 pips, 3 pips at the biggest one.
This one is not even a full, about 67. 2 bars, 6.7, about 7 pips looks like the average. This is on the 5 minute. About 7 pips on the 5 minute.
Okay, so let's go to, I'm going to check this out.
I think it's less than that. It's got to be less than that.
The largest candle we have on the US yen was right when it broke, and it was 2 pips total. So this is very, very small. So this, when you see this small amount, it doesn't take but a little bit to push that sucker way out of range. You can get whipsawed. There's just not a lot of belief in this. Really, I still think that's the line to go. I'm still good the US yen. I'm not as big of a fan as I was earlier.
And one thing about Monday mornings a lot of times is you'll find out you get some good alerts, you get a lot of movement, but oftentimes it's hard to hit those targets because it's still trying to consolidate for the weekly move. So there's still a lot of position taking, and you'll get some of your bigger moves you'll usually get a lot of times on a Tuesday, Wednesday, Thursday, and Friday. So oftentimes I hesitate to take live trades on a Monday morning for that very reason. Usually if I have a down day, it's usually going to be on a Monday.
Rainy days and Mondays get me down.
So
that was a bad joke. I wonder why my wife even married me at times, because that was horrible.
You see right now, it said, basically, here was the wedge. This is really, when we got the second wedge alert, it was right when it broke basically our first wedge and developed another wedge. So it's basically, it was looking at this area, this candle right here as the would have been the top of the wedge. What was it at 10:45 or 8:40?
Jay, was
Remember
your
when?
policy a short? Did you get your 5 pips short? Jay said he took 5 pips profit in Aussie. I'm hoping that's short. We have a new Airis. You stay on that one. Let me go check the other one.
Yeah, the Aussie's just about ready to hit a target. It's coming within a couple pips of a target.
Euro US.
Well, Aussie's moving nicely to the downside. And the dollar is should be Aussie US and British US. So this should be a, like I said, if this thing comes back on this British US, if it comes back into the wedge, the first wedge, where am I at here? 5-minute chart. Go to 1 minute if I can find it. See where it's at here.
That's interesting. And guys, if you get to a pair that you just struggle with, oh, so he's still short. He's waiting for that profit. If you find a pair that you're drawing a wedge and you just can't get it, walk away.
Yeah.
Just doesn't look like
it should not be a struggle to draw the wedge. Wedges should be fairly consistent and fairly picturesque when you draw them.
And boring.
And somewhat boring. Now you see, like the original alert on this was at 7:30, and you said there was another one at British US 7:30. Oh no, we didn't get another one for the British US.
We just got a Euro US. We just got a
Euro US. Okay.
Yeah.
So then this one's still.
That's an interesting one right now. It's Euro is stronger, but there's whole showing short. US just flipped. The 15 minutes flipping all over the place. Guys, when you see the 15-minute RCS flipping all over the place, be careful. Be careful. I'm not saying it doesn't work out. Just be really careful, because that's your strength indicator. That means there's some uncertainty if there's some bouncing around happening. And it's bouncing all over the place right now. And it just broke on the downside from my drawing, but I'm going to look at it. It looks like it wants to go down, which would again mean dollar strength. But there's a lot of resistance coming right where it's at right now. So I wouldn't jump into the Euro US quite yet. You might get a better. Look at that, Al, if you would. Are you in your trade right now?
No, with this trade, with the British pound, I would be keeping my stop somewhere underneath, trying to keep my stop at least under this area here.
Are you live with?
I don't know that well, we're not going to be able to do that with, I want to move this stop down just a little bit below the wick of this big blue candle. Because there's a little bit of a basing here. It could come back and retest this area right in here, where this blue candle is, where this red candle is, the top of this red candle here, to where I've got my stop just below this blue zone, because there could be some more buyers right in this area. I gotta give my stop just a little bit more breathing room because of the structure of the price action. You're not getting a lot of really quick ranges today. It just goes up about 3 or 4 pips and comes back and retests. 3 or 4 pips and comes back and retests. That's what Aussie doing. So Aussie just came down. You see how it just barely came down into where my original target was.
That US yen is just.
Couldn't quite get the 7 pips. It came pretty close to it. And that's why I like to be able to stay and be able to just watch this trade. So if it gets really close like that, then I would just oftentimes I just pull the trigger on it. But we'll see what happens there. It's still well within. It hasn't broken the 62 on this 1 minute chart. If you go to the 5 minute, it's well below the 13 moving average, which is that yellow line, and that's a significant one. So right now we're still good. We're getting 13 and crossing the 62, which is also very significant. So it's still we're still working in our favor. All three moving averages are in the correct direction, and you've got the cross of the yellow 62, the yellow and the purple one. But you can see when we had this nice move up here, it came up, it retested right down about where this area is. And then we had a nice strong move up, came back. So this is where your trend was starting to develop. It broke the trend. So I still expect that there's a good chance it's going to retest where this red candle here was broken above and this zone below, right there where the A is. So this whole yellow area that I'm going to draw right now is a pretty strong area where you it's a fairly decent target area. You just have to wait and be patient.
You keep focus on that, and I'll watch your Q&As.
Okay. And on the Australian dollar, that's basically the Australian dollar. The British pound is starting to come back to life again. You see how it came back in, retested the wedge, retested this little area right here. We had this nice strong blue candle came up, came back in, retested it. And now we're looking at our target up here.
We only have about 25 minutes left in our session, Hal, so hopefully something will happen. But Mondays, this is the way Mondays usually roll, so.
But we got in here at 8. Actually, this thing, if I look, it should be, let me reset this for 7 pips. I think that's got a 15 pip. Take profit of 7. And it's just about ready to take profit on this British US. You see how it's starting to stall a little bit right there, and it's right at that green line. I'm just going to take the profit off. I'm just going to take profit and say this.
All profit's better than a loss, isn't it?
Right there. The fact it just bounced, it just came right up to that, and it pulled back. It was close enough to my 7 pips. I'm not going to play around with it for a couple tenths of a pip and have it go all the way back right where I got in again. I'll just take that profit lock that profit in and be done with it. Remember, you're going for 7 pips, but part of the reason for that 7 pips is you're accounting for a 2 pip spread. So in essence, your main target is to get 5 pips locked in. Anything above 5 pips and it stalls, I'm generally out of the trade because there's a good chance that it will come back and give you another chance to get in, or worst case scenario, comes back and stops you out. Nothing that's more frustrating than have a stop out after you're already up 5 pips. You just didn't take the profit.
A little profit's better than none.
Exactly.
Now I got that dumb song in my head. Rainy days and Mondays always carpenters. Why would I ever even think about that? That's just great. God. I've been stuck in house too long with COVID, I guess.
And you can see the Aussies coming back to retest the entry zone.
Mm-hmm. Yep. And guys,
it came very close to the target.
I was watching the Euro-US wedge, and it was a perfect example. I said, I wouldn't jump in this one right yet. It is just whipsawing through the end of the wedge, back and forth, back and forth. You would have had a head fake. You had enough movement out, and then it went for a short. Then it went in a position. Now it's long, and it's just back and forth. And nothing on our systems and our whole moving averages, nothing tells us to get into it. So if you're not paying attention and you're not if you're trigger happy, this is one you would have just lost on because nothing was in order, but you felt like you were going to miss the trade, so you had to get into it. And it's just nasty. So personally, I would not be trading the Euro US right now because it is just not going anywhere. And the range is so small. So that's a good one we avoided. So we always have the question, well, how do you know when to avoid one? Well, you'll know it when it starts not looking right. And that comes from just being in the room and watching and listening and practicing and doing.
Here's a good example of it. No, we had the wedge. I'm on a 5-minute chart right now, but we had the wedge. That was the orange outline of the triangle. And once it broke the wedge, you can see where it started developing a little. Inside the wedge, it had a lower high, it had a higher low, and then it broke, and it actually broke the C, which was the low. That gives you a good reason to draw another trend line now that it's outside the wedge to see which one of these pivot highs is significant. And you can see where you have your 3 hits. Here's your hit, here's your anchor, here's your hit. You're outside of the main wedge, and now you can kind of use this trend line now as a gauge for if it retraces. So right now you didn't get your target, but right now it's still respecting this trend line. Now we'll make this one a different color if that helps there a little bit. We're going to make this one a yellow, that yellow trend line. It's respecting that yellow trend line, which also coincides with that yellow 13 moving average. And so you can see that that's sort of developed a little bit of a channel between the 13 and the trend line. If it breaks and closes just like it broke and closed below, that might be a good indication. You may want to just cut your losses because now the picture's starting to change a little bit. As long as it can, and this is also another way to stay in the trade longer. You can, as long as it keeps coming up and retesting it and drops off, comes back and retests it and drops off, there's a good indication that maybe this thing's going to have a lot more steam.
Al, can I share my US yen again?
Absolutely. I'll stop sharing.
And I'm going to show guys why it's powerful to know what tools you have at your disposal. This is the trade where we got in way back here, but notice where we're hesitating. We're hesitating here, here, and we just did it again. And when I turn this on, look what's there. We've got this resistance. Now, what this tells me, though, if we can break this, what was once resistance will then become support. So if we can get this thing to go above there, we will definitely hit our target, but we could be on for a little bit longer movement. I wouldn't advise going longer, but if you're got late in the game and you feel like, but you're going to have a battle here. Notice it's to the pip. I mean, it's to the pip on all of these. So that's a powerful tool to understand what you have at your disposal. And my bet is that 107.22 is probably on the 5-minute as well.
Just go put it on the 5-minute. Just go put it on your 5-minute. Actually, that probably is that may be a 5-minute mark.
If it does what my swing does, usually when you have those 3 hits like that, it's usually because there's more of a resistance there. It could be wrong. We'll find out. Okay, where did it go? Here's your demand down here. Where's my supply? That's right up here. So I could that's where. So we got a 2-minute fib, but this is really my ultimate target.
That's where your blue. That's where your your 2-minute blue line was, right there where the red is.
Now we finally broke. We're gonna take profit. I would normally close this out if I was in live on this. I'd close it out because it didn't quite go. But here in a second, if it looks like everything is going to move just a little bit further, but we only need 1 more pip to cover spread. We're at 1.4. That's all we got to go 1.4 above that before the system will trigger it. But we have a nice different trend now. I mean, because we have the flat. Now this becomes support. And the only thing now that we're on the target line, guys, and this is the most frustrating. If you're a newbie, this is the most frustrating part because why haven't I been triggered out? Because you have to cover the spread. So I have to go 1 pip past it. And that's why Al was saying, if you get up to that 5 or 6, take that profit because it's all spread now. You know, if I close this position out right now, I have my 5 pips. I'm just going to let it play out because I think we're going to go over to the 107.26 mark. On my live account, I just closed it out for my 6.2 pip. But we have resistance. What was once resistance now becomes support. So let's go back to our fib tool. Let's change it back to our 2-minute mark because that's going to give a clearer picture. And I can remove this line. And you can see, my bet is it's coming back down here to test this before it ever decides to move forward. As Al says, come back to get the troops. Have a good night. There's days where we don't get any Airis alerts, and now we're getting them all over. So let's see what we got here while it's doing that.
So now US.
Notice when you see these things happen like this, I avoid them. I do.
One ascending, one descending. Yep, they're opposite each other.
They're 15 minutes apart, and I told you they're whipsawing. Yeah, I would avoid these. That's another reason you guys ask, well, when do you avoid them? This is a good case for me. When I see them back to back, 15 minutes apart, and they're opposites, I avoid them. I'm not saying they won't work, but I'd rather have high probability than just being fear of missing out.
Yeah, Christine, the fib numbers are preset on the TradingView. Basically, they're preset with that FBR tool that we have. It's not a TradingView indicator, but it's an indicator that we developed for TradingView.
Nice, Mariska. You got the UJ profits. Now, I'm not telling you how to trade, Mariska, but I would say if you got your daily bread, go to demo. keep that percentage every day. There's my target's been hit. We're going to hit that blue line. Look where it stopped at, guys. Look where the price stopped at. Does not mean it's not going to break through it, but look where it immediately stopped and fell back from, the blue fib, which is also 5-minute red. Okay, so that would have been the maximum we could have got out of this trade for this short term. Okay, to the pip. Now, this is a perfect example a background that we have. Here's our pivot low, rally, base, rally, base, rally. It's going to come back to this area right here initially. I'm not saying get in. This is initially where I would expect it to drop back down, but we may get another alert before that happens. If we get alert, it's drawing this new wedge that I can see right here. I see a wedge right here, flat top. If I can draw it this way. If they come back and they say, we got a new alert that looks like that, I'm all right with that. I'm all right with that. But I'm going to wait for Airis to do the work for me because I'm not smart enough. I'm not good enough. I'm going to let Airis do the heavy work for me, tell me where I need to be paying attention to, and then get in. There's no what did I just do? I took off the chart. I see what I did. There's no reason for me to have to work so hard. There's none. Make it as easy and simple and mechanical as possible. Let me go back and put this on here because I like to take screenshots. My entry was right here, way back here. So we go, exit was right about there. And there's the stop, so I'm going to stretch this out.
Slide it over. There you go.
Bit and then lock it down, and that's our trade for the day. I mean, really, that's one of our trades. We had the Aussie US workout, pretty good. So let me go ahead and get rid of the fib lines again, guys. The tools that what we have on the screen, we're working very, very, very hard and as fast as we can to see what we have to be very, very compliant about everything. I'm saying that not just because Mariska's in the room, but there's so many different facets. I didn't even know she was until she just posted. But there's so many different facets that I don't understand and Al and Matt don't understand about what we have to do to make these things available to you where it's not a conflict of interest for the developers, for Hawkeye, for Auvoria Prime. So just be patient with us. It's not going to go away. We're not going away. So we've got plenty of time, and there's no rush. There's always going to be trading to be done. So don't panic. We will get to it, and we'll make it as feasible for everybody as possible because they are valuable.
And with this, we have 10 minutes to go, and we start at 8 o'clock. And right now, between 8 and 15, for an hour and 20 minutes, you just pretty much you're done for the day.
Yeah, and we've only got about 10 minutes. We got questions and answers. I mean, because right now there's no reason for us to take another trade in front of you guys, other than you guys practicing. Is there something we can show you that you feel like you missed that that we need to make sure that we cover? Do you understand how you don't have to use the triangle tool necessarily? You can use lines if you want to. We like the triangle tool because it just makes things a little bit more precise for us. But Matt draws with lines, and there's nothing wrong with using lines.
If you don't have Trading View, I mean, you probably won't have the triangle tool. But yeah,
right.
Then you can just use regular trend lines. It works the same way. Because really, that's all you're doing is you're drawing trend lines, valid trend lines, reference to when the alert was made.
Right. And that's the cool part is it gets a little bit. I can draw a line pretty quick. I like how it stops, at the end and doesn't keep going and crossing. And I like to, I'm very different from Al when it comes to charts. Al will have lines all over the place, and he understands exactly what he's doing. Me, as clean as I can get it. I want as least on my charts as possible. The whole reason for these tools down here like they are, this whole moving average being down here, was because I told the developer it's too noisy up here. Normally you'd have their whole moving average with these other moving averages, and it gets lost. And we will talk more. Al, let's talk about the value. I'm looking at the 5 minute. You can see my chart, right?
Yes.
Let's move this out since I've already taken a picture.
And there's a question too about the position size indicator, Brian.
Right. I'm going to put that in the Telegram channel for you guys. I'm going to get it to Mariska first, let her approve it, and then once she's approved it, I'll throw that in the Telegram channel for you guys. I want to make sure we stick with the rules here. I'm a rule follower to a fault. So, Al, we were talking about moving averages, and let me go ahead and remove the yellow line because that's no longer valid for us. And the green line for entry. We could still do it if we wanted to, but so all we're looking at on our charts is a couple things. Number one, the moving averages. Now these are all one tool. Okay, that was the beautiful part. Al, the green line here is which one?
The 5 period exponential
move.
Exponential. Yeah.
Yeah. 5 period. The 13 is the one I really pay attention to. It's the yellow one. I know the 13. 5, 13. Purple is 62.
62, yeah, on the 5 minute chart. The 62 changes colors depending on what chart you're on. The 62 will change colors, and that's just so that we can see at a glance what time frame chart we're on. I know if it's a purple line, I know it's a 5 minute 62. If it's an orange line, I know it's a 15 minute 62. But one thing that's also important, Brian, is you go back there below where the A is, you can see where the 13 crossed the 62. A little bit further back, yeah, right in that area, you see where that yellow line crossed the 62. That's a significant crossover. Is when the 13 crosses the 62. That's also another good indication of your direction of the trend, especially when as it starts. You can see as the yellow one starts widening away from the purple, it gets stronger and stronger and stronger.
And that's key to pay attention to that as well. And then this line right here, Al, is the 30 minute
62.
62. That's
that's blue on all the charts as well.
And you'll want to make sure so you have the
5
green, 13 yellow, purple on the 5 minute 62, and the 30 minute. All this is all in one tool. Okay, but if you don't have that tool yet, it's the 5, 13, 62, and then the 62 on the 30 minute. All.
And you can look at a glance on the right hand side of the chart where the color you see the values of those lines are, and you just look at the color. You have the green over the yellow. The yellow is move over to the right on the right side of the chart there, Brian. Right in there, that area. You can just look at that without even looking at the lines. You can see how they are positioned with each other. And how, like you can see where the yellow is moving away from the purple one. And you can start seeing what the difference is between the green and the yellow for a value standpoint to see if it's starting to cross back over again.
Mm-hmm. So that's one tool we're working on. Now, On this section down here, all this is 2 RSIs. That's all. And what we found with TradingView, you can overlay them. Well, each time you use an RSI, that's one tool. So you would have 1, 2, 3 minimum.
Four.
4 if you were able to do the 30-minute. 5 if you do the fib plotter, which we believe is extremely important to understand. 6, 7 if you do the RSI. If you have to have the whole, that's 8, and then 9. So you would have to have one of the most expensive trading views out there to have 9 indicators on there. So the MMA takes all care of all the moving average. That's 1. Fib plotter, that's 2. This whole thing right here is 3. That's the RSI been programmed over the top of each other. It's automatically overlaid. And we've made it to where it's exactly like Al's charts. Al's picked the colors. The developer picked the colors exactly what Al wanted. And so everybody's chart will look the same. Now, if you are just anti-blue, you know, you just hate blue, change it. If you don't like blue and orange, change it. But this way, that when you share your screen with us, or you're sharing a screenshot with us and communicating back and forth, we now know what you're looking at. Because if you change all the colors, we have to do a little more thinking. And we don't want to think. We want to know, okay, this is what they're doing. We don't want to try to guess what you're doing. But what was cool, the developer decided to put the whole moving average, which would normally be a moving average on your chart, in with the RSI. Now, if I back out, you'll notice I have 15.5, and let me change this back to 1. The cool thing is the whole moving average shows the 15-minute here, and then it's set up to show the 15 on top and then the 5. And then on the 1 minute, it's set up to show the 15, 5, and 1. So you're seeing all the whole moving averages on one chart. Very cool kind of feature there. So that is important, and this whole moving average for me becomes more of the trade management side. Has nothing to I can't say nothing to do with entry, but I really use it more for me, more priority even on the trade management side of thing. Entry really comes in here, and we got out at a good time. The U.S. dollars are 1. The U.S. yen is now the week. They're fighting for bottom now. So this thing is probably going to just flatten out and go nowhere.
One thing I've noticed too on that 1 minute chart, Brian, just for reference, is that when you see it break the wedge and you see all 3 of those whole moving averages the same color, whichever direction you're going, that's also a good indication that you may be in the right direction to accept the trade for on the wedge.
Correct.
When all 3 are green or all 3 are red, that's a very, especially when you have all 3 green or all 3 red and your RSIs are coming out of that 50-60 range together, that's a very strong, powerful indicator that you're in the right direction for the trade.
And let me just show you guys before we call it a day here, the RCS. The RCS is set to a 14 moving average, and it's symbol. Symbol means it's going to do whatever I tell it to do from what pair I'm looking at. If I really wanted to freak out my friends and my own personal eyes, I can put it on auto. And what that will do is once it refreshes, it's going to show me everything about every pair. And some people they memorize the colors, not me. I rather just know what I'm focused on, but there are people that we know that trade with all 8 and they are able to track it. And it's difficult. You can see Canadian dollar is the strongest, Euro's next, and it tells us every order of what's strong. So if I was really jumping into a day trading situation, we don't trade the CAD yen. My bet is oil's having an effect, but those would be the pairs we would be primarily willing to look at.
You're like right now, the Euro US would be a pair I would look at, and with favoring the strength to the Euro side.
And let's see what we got. And that's exactly what we got. We've got straight. It whipsawed you out on the short side only to come back and take it long. This is what I was talking about. This was far enough of a move that if you would have taken it short and this was going back and forth on the RCS at this time, it wasn't strong. It was going back and forth. They were 4 and 5, I believe. Now you've got a strong move away. And you had time. You had your breakout here. You could have waited for it to touch it here, and then it broke out, went a little further, then it came back. This would have been a great entry right here, and boom, got to take off to the horses.
And take a look at those 3 whole moving averages right there where it broke out. Here.
It's a good sign. All right, guys.
We're about done for the day.
that's our time for the day. What we're going to do is get prepared for tomorrow. We've got an evening session tonight as well. All sorts of stuff going on. We will be getting some more information to you guys as well. I hope you had a profitable day. If not, if you broke even, that's a good day too. And we'll see you guys tomorrow. Y'all have a great afternoon.
Thanks everybody.